So welcome back to the channel. So today I thought I'd go through a Euro Pound 1 to 3.1 trade that I sent to my free signals group, which I'll leave a link to in the description if you want to get involved in that. I sent all of my trades there completely free, so if you want to join, the link will be in the description. Before I go through the breakdown, I'll show you the proof of entry and all of that, and then we'll get into why I did take this trade. So yeah, let's do it. Right guys, so real quick before we do the breakdown, here is the proof of entry that I did send it to the group before it actually happened. So you can see here we have the Euro Pound buy limit, and if we click on the picture, you can see we have the live price in the middle right of the screen, showing that it is not on bar replay, it was live price. Originally we were targeting this area up here, but I did take profit here at 1 to 3 once price started rejecting that area. So yeah, let's get into the breakdown and why I did take this trade. So how I used to think when we had a bullish market like this, so see on the 4 hour, we were printing higher lows, higher highs. And then at this point, we sort of distributed over to the downside and we took out this most recent higher low. So in the past, I would have considered that a break of structure and I would have been looking for sells. But what I found recently, what price actually likes to do, if we have an untested area of demand, which is imbalanced, here we have this inefficient price action just above. Price likes to come down, take out the higher low and mitigate our inefficient area of demand or supply if we're looking for a bearish example. And then it will often just continue to the upside unless we get a further failure of demand, and then we will definitely be looking at sells in that case. So for sells, I would have liked to see this demand fell, and then I would have considered the possibility of sells. But until this area breaks, I wouldn't be looking for sells. And why noticed once we had price come into this area on the 1 hour, if we play price, we did get a very nice break of structure to the upside and shift in order flow from bearish to bullish. Here we were bearish, printing lower lows, lower highs. Here we were printing higher lows and higher highs, showing that the order flow has switched bullish. On top of that, above our area of 4 hour demand, we did create these equal lows, which I saw as early buyers. And then once price came up, it came back down, swept the liquidity of these buyers. And then as soon as it did that, it impulsed to the upside and broke past this most recent structure and failed to hold this supply here. So we have a failure of supply and a break of structure. That is a good sign that the market wants to continue up. On top of that, we have had a liquidity sweep to the downside. And when you get a liquidity sweep in a particular direction, price will usually impulse and start a new trend in the opposite direction. So in this case, price sweeps liquidity to the downside. So we expect price to form a new uptrend, or at least a temporary uptrend, until it comes into a key level. So once we have had this, we just mark out this as our break of structure or change of character. In this case, because it is a break of structure in the opposite direction to the trend, we can start looking at potential entries. And for this trade, my entry was based on the 2 hour, because I noticed we did have this very nice area of demand here, which was inefficient because it left this inefficiency. On top of that, going down to the lower time frames, we did have this liquidity resting just above. If we go on the 15-minute, you can see it a bit more clearly. We have these inefficient areas down here, and we also have this area of liquidity resting just above. So this would be a very prime place to place a limit. In addition to that, we are also at a discounted level. If we draw the fib tool from the low to the high, you can see that we are between the 50 and 61% retracement of this move. If you find like an area of demand all the way up here when price is overbought, I would usually just discount that, because you don't want to be buying at premium pricing. You want to wait for it to be in a discount, which is this area right here. On top of that, if we play price a little bit more, once price approached our area, what it started to do was form this sort of floor of liquidity. Going on the 15-minute. we have this sort of floor of liquidity, which price is generating as it is approaching our zone just above. So we had this area of liquidity, if we just draw that on. And then when London session opened, note the timing of this trade happened at exactly 8 o'clock, the exact moment the London session opened. And a lot of the time you'll see this when you have Asia consolidating like this. London will manipulate either the lows or the highs, and then it will impulse in the opposite direction. And that's exactly what we had here. So our buy limit was at the top of this zone, and I did have a bit of a conservative stop loss all the way down here at 22 pips. We could have just had it below this demand, but on the 4 hour, we did have further inefficiencies and an area of demand down here, which I thought price may want to retest. So I had a safe stop loss just down here, and we were targeting the midpoint of this area of supply for around a 3.2 trade. And as you see, once price tapped our zone, it just flew almost immediately to our area. And currently we are retracing, and I am looking at possible re-entries at this area of demand, which is a very valid level of demand since it took out liquidity and broke structure and created imbalance. So I'll be looking out for that in the coming days or tomorrow. So yeah, that was really it for this trade. That's all I used for the trade. So to go over it one more time, we had liquidity from the lower high taken out, so people would be selling at this point after the retest of the support area that broke. So most support and retail traders, support and resistance traders even, are selling at this area. So we have a decent amount of liquidity to take just above it. Once we tapped into our 4 hour level, the hourly trend reversed and we had a failure of this supply. Price came into this area, which is just basically no man's land because we don't have any liquidity in this area. And so price is very unlikely to reverse and switch trend from here. That would be another confluence. It's sort of like, it is a confluence, but it isn't one. It's the absence of any areas which may cause price to reverse. So if say price came to this level, we had already broken structure, but if price was at this level, we'd have the conflict of a supply, which may cause the trend to reverse. But in this case, because we have cleared the supply and come to just an empty imbalanced area, we are very unlikely to see a reversal at this point. So you know, if price comes to this discounted level of demand, the probability is that it will reject and continue up at least until a certain level of supply, which we have here. So once we had the failure of supply, we waited for a pullback into a discounted area of imbalanced demand, which caused the initial breaker structure and the supply failure. And then we just targeted a previous level of supply, which was the one that caused the breaker structure. And that was literally all we used for this trade. So yeah, I hope you guys found this video useful. Remember, if you do want to copy all of my trades, the link to that will be in the description below. It's completely free. Make sure you like, subscribe, and I'll catch you guys in the next video.